In other news, Manila's gaming regulator asserts any individual or group conducting online gambling without approval to operate should not be categorized as Pogos. The Philippine Amusement and Gaming Corporation, or PAGCOR, made that statement following the arrest of Chinese and other foreign nationals who were reportedly involved in illegal online gaming. PAGCOR says legal Pogo operations are strictly being monitored by the agency, and any gaming entity that fails to pass the application process cannot be labeled as legal operators. PAGCOR adds it is in close coordination with various government agencies to crack down on illegal gaming operations. PAGCOR currently has 34 approved Pogo operators, 127 accredited service providers, and 5 special class of BPOs which underwent probity check. The Philippine government is set to suspend the operations of 175 offshore gaming firms and deport around 40,000 Chinese workers as part of the crackdown on the Pogo industry. This, plus the continued work-from-home setup for BPO companies, are making some investors a little bit nervous about the Philippine property sector. Is it time to sound the alarm? Well, let's ask our next guest, David Leechiu of Leechiu Property Consultants. David, hi. Good to see you.
Hey, Mimi. Good morning. Thank you for having me.
All right. So, David, are things nervous right now? I mean, where are we in the property market at this point?
Yeah, I guess you can say that people are very nervous. The vacancies in the office sector are quite high, even though 40% of that vacancy are fragments of space. And all this discussion about whether to shut down the Pogo sector or not is making a lot of people concerned. And it's not just limited to real estate. The Pogo sector occupies 1 million square meters of office space and possibly close to 2 million square meters of residential space. And that's quite significant. The sector occupies about roughly 6% of total office space in the Philippines. So shutting them down now and making all the space available at a time when there's about 3 million square meters of office space vacant all throughout the country is gonna have a meaningful impact, to say the least.
David, help us understand the Pogo situation. I know that Pogos emerged significantly in 2016. At its peak, the industry employed over 300,000 Chinese nationals. That number, as we know, has dwindled from 60 licenses pre-pandemic. We're down to just 34. How many more are actually left here in the Philippines by your best estimate?
We reckon that there's about 1 million square meters worth of office space still being leased out in the market.
All right. And what is that?
It's kind of hard. It's kind of hard to provide a hard number, but our estimates are about 370,000 people are directly employed in this industry, of which 50 to 60% of that will be foreign.
All right. And what is the outlook now? When you talk to these Pogos, some of whom may be your clients, what's the sense? What's the sense you're getting? Are they leaving too?
I guess the sentiment is that they want to stay, but the higher cost of taxation is what's driving some of them to consider other locations, and that has been happening for the last 30 months since the issues we had with the crackdowns, the lockdowns, and the higher taxation has already resulted in about contraction of 630,000 square meters of office space through the market. So, from 1.7 million square meters in 2019, end of 2019 total, they're down to about 1.1 million square meters today. So about 630,000 square meters vacated. In fact, this is the only sector in the office market that is negative and net negative and actually experienced a contraction. If you look at the corporates, if you look at the BPO sector, today they are net positive in demand. And so this Pogo sector really has had a negative impact on the office sector and the residential sector, primarily in areas like the Bay Area, some portions of Makati, and the Ortigas Mandaluyong area.
And it turns out, David, unfortunately, the BPO industry which many were hoping will pick up the slack in demand. They might not be needing that much space either because the work from home setup is getting an extension.
Yes, I do believe that, first of all, the last 30 months, the BPO sector had record hiring rates, about 150,000, 145,000, 150,000 people got hired in the BPO sector. And that's net new jobs for the Philippines. That's been fantastic. And recently, in fact, today, we are officially announcing the roadmap of the IBPAP for the Philippine industry, where we're projecting to grow by almost double to 1.1 billion new jobs, net jobs, in the next 6 years alone. And a lot of that's been driven by the global crisis that we're going through right now. And my notion, well, look at it this way. In the last 30 months, the BPO sector still took 400,000 square meters of office space, even though they should have taken something closer to 900,000 square meters. And that gap represents the impact of work from home. I think in the next few quarters, maybe 2 or 3 quarters, you're going to see a migration out of work from home into what I think is a work near home situation, where companies, instead of taking mega sites in a few handful locations, they will go through this hub and spoke model where they will have a half mega site, so a significant presence in somewhere like Makati or Bonifacio or Alabang, and then they will have satellite offices in a number of locations, like in Cavite. Instead of having one site in Cavite, they will have 3 smaller sites in Cavite, closer to where their employees work and where the population centers are densest. And so ultimately, this work from home community will transform and evolve to become work near home. And that's going to accelerate the availability of jobs out to the provinces in a meaningful manner.
And David, what do you think is going to incentivize them to move from work from home to work near home? I mean, if they can do the work in the comforts of their house. Go ahead.
It's really driven by labor. And yes, you say that a lot of people are saying we're working from the comforts of our house. Well, I guess not all households are as comfortable as others.
All right. Okay, David. So you're not expecting to see, ghost towns, ghost buildings, empty buildings, groups of empty buildings. You're not looking at that scenario yet.
At least in the next 12 months, I don't think so. Primarily because 95% of all leases got renewed. If you look at the BPO industry, they took on 450,000 square meters of new space versus the contractions they've gone through, which is about 200,000, 220,000 square meters. So there's still net 250,000 square meters over the last 30 months. And in the last 30 months, 1.5 million square meters got taken up. So and based on the pipeline we see, 450,000 square meters of new deals want to get transacted in the next 3 to 6 months. That's a significant improvement from a year ago when it was less than half that number. So the pipeline is very encouraging. The rate of renewing tenants at 95%, 97% of tenants renewing despite work from home is a very encouraging sign. One of the reasons why is because tenants who hired so many people in the last 30 months without taking any office space are holding on to their existing portfolio to be able to backfill the new hires into the space that they're not using as a result of work from home and this hybrid situation in the office space. And the biggest testimony to that is that even in the last 8 months, first 8 months of the year, we have done more in the first 8 months of this year than the 12 months of 2021. So I think we are about 10 to 15% over the total leasing numbers of 2021 in the first 8 months to date. So that's very encouraging, which is why I think we're going to close this year, 2022, with about 650,000 to 700,000 square meters of new leasing versus the 580,000 that was done in 2021. Very encouraging sign. And that's why about 2 or 3 months ago, we said to the market, 2022 brings us back to what numbers were in 2016 when there was the so-called pre-Pogo office sector volume of transactions.
But when do we go back to the golden age supported by Pogo numbers?
Well, that all depends on what we do as a country and with our leaders.
If not, David, if not the Pogos, are you seeing new sectors that could take the place of Pogos?
I don't know. I frankly don't know. There could be other sectors. Long term, I think tourism will be the largest sector in the Philippines, largest industry of the Philippines within 10 years. And a very big chunk of that will be higher value catering to the medical tourism sector and the retirement age sector. And why? Because it's just going to be driven by the sheer physics of the need, because the world is growing older faster than ever before, and the succeeding years are just going to make that situation worse. Countries like Japan, for example, where 29% of its population are over 65 today. In 2025, 1 million Japanese people will retire every year, all the way till the end of time. And those numbers mean that who will take care of the middle class? Who will take care of the lower middle class? I think the wealthy people from these countries will always have the first world as options, but the middle class of these countries will need to find a more viable, sustainable solution to aging and the massive acceleration of healthcare costs in the twilight of their lives. And for me, that we don't have to chase everyone. We just have to chase 4 countries: Taiwan, Hong Kong, South Korea, and Japan. These 4 countries have a number of things in common. Number one, fastest aging. One of the fastest aging countries in the world. Number 2, one of the most expensive places to live in. And number 3, their middle class and lower middle class are really squeezed in this situation where they don't know what to do. And 4th is that these 4 countries have some of the longest living people in the world. So you retire at 65, but guess what? You statistically, you're going to last up until 95 to 105. What do you do? How do you fund yourself for the next 30 years, 35 years of your life? You know, that's pretty much one generation. And I believe that the Philippines has a place in that solution. That's quite exciting.
All right, exciting things for the next 10 years. Speaking of the squeeze, though, David, the BSP, the central bank benchmark, has more than doubled since May. And for the rest of the year, we're looking at maybe another 50, 75 bips more. How much pain will this inflict on the property sector? How is supply and demand coping?
It is going to squeeze a lot of the speculators out of the market. It's going to defer new investors and new borrowers from dipping into this. And it's been painful for a lot, especially what's happening in the US right now, where prior to this increase in interest rates 5 months ago, they had record high real estate prices, and all over the world, prices are tanking. Why is that not happening in the Philippines yet? Because it's a validation of 2 things. Number one, how deep the pockets are of Philippines. Okay, the private sector savings is actually much higher than everyone thought. And this is the testament to that. it would be impossible to sustain all of this and the prices at where they are now, if not for the savings rate of people. Number two, the private sector debt and household debt is actually a lot lower than most people anticipate. Again, when you're a middle-class person where your bonuses, your salaries have been cut, your benefits have been cut because of COVID and everything that's followed after, and yet you're still able to hold on to your condo or pay your rent, it's a testament to how low your savings is. If you're a small to medium-sized businessman, predominantly their businesses have been wretched by COVID and the last 4 months with interest rates, inflation, etc. And yet many lifestyles continue to stay intact. Again, that is not possible if not for the high savings rate and the low debt levels.
So where are prices today? I mean, we're getting squeezed from high inflation, higher rates. Are property prices, going through the roof, or are prices a little bit more realistic?
So prices continue to climb in most high-end markets. So Forbes, Dasmariñas, Ayala Alabang, Punta Fuego, many villages in the provinces like New Valley continue to climb in property values. So capital values continue to climb despite the contraction in the economy, despite all this negative sentiment about investing, despite work from home, despite all these issues with Pogos. Property prices continue to climb. They will probably start to climb at a slower pace given how interest rates are being driven. Here's another thing, is that the stock market, yes, it has shred a lot. From the peak at 9,000, we're down to about 6,000, 5,800, 6,100. Who knows what the day will bring. But the reality is that a very small fraction of the Philippine population is invested in the stock market, to the point where the stock market in the Philippines is not a true reflection of the economy anymore. It's more sentiment driven. And that sentiment is going to keep causing the physics to slide, investment in the PSE to slide. But I always look at that as a buy opportunity. The next 12 months for the Philippine stock market will be a fantastic buy opportunity. Why is the property market holding? Because people are not putting their money anywhere else. They're not buying gold. They're not buying jewelry. They're not buying NFTs and Bitcoin anymore. And if they did, they wouldn't put a significant chunk of their net worth in there, apart from a few millennials. The property market continues to be the only holder of value in the Philippines. There is no other place. Oh, yeah. If they want to hold on to peso assets, because of course now with this massive devaluation, a lot of the public are now converting their pesos into dollars and exiting the peso assets.
David, we don't have much time. Just wanted to share, I was surprised to find out that housing is actually the second largest contributor in the CPI basket. As you mentioned, not everyone's, it's a very small segment of the population invested in the stock market, but everybody wants a home. Everybody wants their own piece of property. So I guess I want to end with this final question. So what is the Leechiu advice then? What do you advise our viewers? 1-2 pieces of advice.
Keep your debt levels low, save a lot, live cheap, and invest.
Where?
Stock market, real estate.
Okay, real estate, where?
Landed property, but always prioritize property that will generate rent.
All right.
And the two safest markets are Makati and Bonifacio, and then everywhere else follows.
All right. On that note, David, appreciate the time. We hope to see you soon, I hope.
Mimi, thank you. Let me know.
Okay. All right. Up next, will the PSE Index fall deeper into bear market territory again today? We'll speak with Chris Gabaldon of Sun Life Asset Management for some market perspective when Market Edge returns. You're still watching Market Edge. The headlines: Philippine stock market also rebounding, opening higher by 1.5% to 59.67. We're now joined by Chris Gabaldon of Sun Life Asset Management, who joins us live via Zoom. Hi, Chris. It's a good morning, isn't it?
Hi, Mimi. Yes.
At least as you come on the show, you're seeing the market open higher. As of 9:33, the index already up 1.6%, 91 points. We're at 59.71. But Chris, really, give us a sense of where you think we are in the stock market cycle and whether you think the financial market reflects accurately either what's happening now or what's about to happen on Main Street in terms of macro fundamentals.
Okay, so with the close yesterday of 5879, we're down 22% from its Feb 9, 2022 high of 755. I would say we are in a down cycle and we may not be at the bottom yet. We're now trading at 13.86 times. Maybe we deserve to trade at multiples below the 5-year mean of 17.96 times, given what's going on in the macro inflation concerns, strong dollar, current account deficits, and higher rates. We, in March 2020, hit a low of 9.6 times multiple for the index, but that took a very short time, and we recovered from that. I think our fair multiple might be at 15 times for the market.
Fair multiple at 15 times the market, which means a little bit higher from where we are now. Just a little bit.
Right.
And okay.
Just a little bit. And we're hitting our index target at this point, given things that's going on.
All right, so what is your target again for end of the year? Hi, Chris. What is your index target?
It was 7,600, but we are reassessing that number.
All right. So at what point, though, Chris, would you expect demand destruction for commodities, for consumer goods in general, which could later translate to earnings downgrades?
So we are not seeing demand destruction at the moment. Loan growth is still healthy. Private consumption is strong. There's travel and mobility that's going on. Remember, we are coming out of the pandemic. And however, if this is prolonged, the situation, things might change. If rates continue to move higher, exchange rate goes out of hand, and eventually GDP is affected, this could lead to an erosion of the purchasing power. You'll see belt tightening, there's delayed or deferred capex or purchases, and margins could be squeezed if higher costs cannot be passed on. I know a lot of consumer companies are not fully passing on these costs. Even the property sector could be affected with the higher rates, especially on the resi side.
And what about the peso? I mean, are you seeing any potential tailwinds for the Philippine peso? We have been breaking record after record after record, these peso weakness levels. What do you see? Is there any potential good news in the horizon in the short term? By the way, the peso opened at 58.87 this morning. That's slightly stronger than 58.97. But here we are, just a few steps with 59.60 possibly just around the corner. Are you expecting any good news, at least?
So maybe tailwinds could come from higher remittances in the fourth quarter. Right. In the third quarter, we saw a strong demand for dollar and importation. Manufacturers and retailers get ready for the Christmas season. So there's some seasonality there. Also, tourist arrivals and an influx of dollars could surprise in the fourth quarter.
So what is your outlook range for the Philippine peso for the rest of the year and maybe for the first half of next?
We are reassessing our in-house forecast at the moment, so hard to say.
All right, but here's the thing. It's not just the peso. I think this is very important for everyone to know. It's not just the peso. I think we have a graphics of the performance of major currencies against the US dollar, and you will see, again, it's not just the peso that's weak. If you look at everybody else, the British pound is among the weakest year-to-date performance against the US dollar. It's actually off by 20.5%. The Japanese yen by 20.4%. Swedish krona, euro, Australian dollar, Canadian dollar. So everybody's really just weak. And we are somewhere in the middle of the pack. I guess my next question, Chris, now is what can regulators, the central bank, and even Philippine government do to maybe restore credibility and confidence in the markets? I know we don't like capital controls, but are there other tools in the kit except for, rate adjustments?
Well, yeah, since you said it, I was hoping that the BSP could be more aggressive in hiking rates. I was hoping they could surprise the market, then maybe hold back in the succeeding meetings and in their rate hikes, right? But as to what the government could do, we could promote tourism more. We could lessen COVID restrictions. We could also attract the BPOs, incentivize them to come here. And for the Pogos, maybe we should keep them.
All right. Let's go over some interesting corporate stories now. Cebu Pacific says that it plans and it's hopeful it can restore full capacity by the end of next year, because currently their international flights are just 50% what they were pre-COVID, but it's their domestic flights that have more than recovered. They're about 110% pre-COVID levels. So are you starting to like airlines at this point?
Yes, we are, and we think international flights is the opportunity, and maybe the key is the North Asia market opening up more.
Okay, by North Asia, we're talking about China? China, correct. All right. Okay.
Yes.
Okay, and the other countries up there. How about this? Dragon Pay saying the transaction volumes, these would be digital payments that go through them, have doubled year on year. 140 million transactions processed as of end August, which brings to mind really the digital wallets and the digital banks, 6 that we have. Do you think the prices, stock prices of those, the companies, or the parent companies of the digital wallets, like maybe Globe Telecom, PLDT, have fully priced in the potential of digital payments and the boom there? Or are valuations too stretched?
We think the growth in this kind of digital service, whether digibanks or wallets, would continue. As to valuations, it has come off, but given the overall market now, it's all valuations are sort of depressed. So what we're looking at for this space would be profitability of these companies.
All right. MWSS also penalizing Maynila, 9.26 million for continued water service interruptions within the Putatan water treatment plant supply zone from May to July period. What about this? Aboitiz Data Innovation and ShipTech Solutions partnering to boost logistics industry. Logistics, what's your take on that sector?
For logistics, particularly this story, we think it could benefit its other businesses, particularly its energy, food, banking, land, and infrastructure segments or businesses.
All right. Singapore-based BPO TDCX also expanding with its 6th campus in the Philippines. They're opening a new office in Iloilo. Certainly good news for the property sector. We just had David Leechiu earlier in the program, Chris. Because some are starting to worry about the property sector and what that could mean for REITs. Are you starting to worry? I mean, the BPOs could extend work from home, although eventually they could do work near home, but the Pogos, they're fading.
Yeah, so our concern is whether these property companies could implement their escalation rates. There might be more negotiations moving forward to bring that down. Aside from possible vacancies that could happen if, really Pogos left the country.
All right. And finally, Aboitiz Power executive Dennis De La Serna is the new president and CEO of PISAM. Lots of Aboitiz executives are moving into government posts, leadership roles there. Gabs, it's time for the blind item, the most exciting part of the conversation. Why don't you talk to us about stocks that you're monitoring closely? I think you like this. Don't tell us, just describe. What do you have for us today?
All right. So this company's category would be classified as consumer discretionary. It is a beneficiary of the reopening story.
All right.
They are seeing recovery in terms of volume and earnings. They have a new site in Metro Manila, which should provide new sources of revenue, but this is expected to open sometime 2024. For longer-term growth and sites, these include Cavite, Cebu, and Clark. From net losses in 2021, we expect significant recovery in earnings in 2022. So this name for us still has like 20+% upside.
Ooh.
And it's trading at cheaper multiples versus its regional peers.
Wow, 20% plus upside. That sounds great. We're just going to have to guess which stock this is if they want to get it that 20%. Christina Gabaldon, thank you so much for joining us, Gabby. Hope to see you soon.
Thanks for having me, Mimi.
All right.
Bye.
All right, we're taking a quick break. Coming up, we'll get the thoughts of British investors on the Bank of England's attempt to calm the bond market and generally how the sentiment is going with British Chamber of Commerce of the Philippines Executive Director Chris Nelson. He's joining us after the break. Stay with Market Edge. The Bank of England steps in to calm markets, announcing it would buy long-dated bonds, causing government bond prices to soar. The scale and speed of the sell-off in British assets have added to the global jolt in the world market, raising concerns about, possible contagion and chaos led by the Fed's aggressive rate hike cycle. For perspective and to help connect the dots back to countries where British investors are putting their money in, Chris Nelson joins us live, still all the way from Portugal. It's early morning there, Chris. Always appreciate you joining us.
Well, good morning, and good morning to your viewers. It's nice to be here.
Chris, why don't you give us a sense of where British investors are today? What is the sentiment? What are your investors, the businesses in your chamber telling you?
Well, I think, I've been watching the program, so I say there's two things. So first of all, of course, it's the interest in the Philippines. We've just actually had a 2-day virtual trade mission, so I think they're quite optimistic in terms of the Philippines and outlook and what we're trying to do. And then, of course, you've got the backdrop, and in your report quietly noted that the British pound has depreciated versus the dollar at about 20% this year. Of course, it's dollar strength, which is affecting all currencies, and that's, of course, the peso. And the pound has also depreciated against the peso by about 8%. So I think the way to look at it is the following. I think that British companies, and we just had at least 9 of those, are looking very much at markets overseas. They're looking at the Philippine market. And then, of course, we have what's going back on in the UK, where clearly, obviously, the mini budget, the fact that the government's moved to cap energy bills, to reduce taxes, and this, of course, has led to concerns, which, of course, led to the Bank of England yesterday buying government gilts.
But Chris, when you talk to the businesses, British investors, are they still bullish about making investments, or do you feel they're holding back, maybe deferring or investing a little less?
No, I think the way we look at it is this. I think our investors are continuing to look ahead because what they look for is the longer term. And we've built a lot of these relationships. We've been building and working, as you know, on the British Chamber to promote trade investment between the UK and the Philippines now for, it's over 8 years. We've been doing it. I've been doing it myself personally. So I think they look longer term. Of course, will they be impacted by input costs? Of course, the depreciation could make, of course, those goods more competitive in the Philippines. And let's not forget, we've seen very good performances. We We've discussed this before. British pork, for example, is up by 30% this year. So we see that continue to grow, and we see a lot of opportunity for the companies in the food and beverage sectors.
Chris, you mentioned pork. Very interesting. UK pig meat exports are up 37% in the first 6 months. That's what you mentioned. This as we're living in an environment where you've got a 15% in quota and 25% out quota tariff rates per pork, which are extended until December 31. But Chris, here's the thing. I just got a copy of a letter from a group of pork meat importers who are actually asking the government of Mr. Marcos, President Bongbong Marcos, to put in import duties on pork at 5%, even lower, 5% in quota and 15% out quota for 5 more years. Do you think this is going to boost this industry and the sort of trade that we see for this between the two countries further?
Undoubtedly. I mean, we've seen a lot of opportunities. I mean, the Philippines is now the second most important market, I think, outside of China. And I have to put a lot of credit with our partners, which is the Agricultural Horticultural Development Board, and they are coming back again, actually. So we ran a very successful meat mission with them, British Meat, in May, and they're coming back for a second event on the way through to some other parts of Asia, and that'll be on the 2nd of December. So, yes, I mean, the interest, and I think that's going to continue. And also, that's also helping, let's not forget, the supply of pork, British pork, and the high quality, and also beef, is also one of the reasons, also, of course, helping, of course, on price inflation or food inflation, which, as you recall, was one of the earlier issues prior to that. So, yes, I see it going forward. And obviously, we work closely as well, and we have very good ties with PAMPI and the meat importers.
But you mentioned, Chris, that the Philippines is the second most important partner for the UK after China. I know that we're now working, the UK will roll out a new trading framework instead of the GSP or the generalized preference, system of preference. You're going to be using the Developing Countries Trading Scheme, DCTS. How will that...
Correct.
Could you remind us, how will that further boost our trade relations? What is going to be the difference between that and GSP, which already offers, you know, a very low or zero tariff for certain products?
Yeah, so look, it was just launched on the 16th of August. It's going to cover over 80% of Philippine products going into the UK will be duty-free. As our ambassador, Lord Beaufils, has said, this will further boost and develop trade between the two countries. And I think what is the key here, and for now, it's simplifying some of the measures in terms of countries of origin, some of the other regulations and requirements. So we see that as a further boost. And yes, I think it will develop. So in terms of GSP Plus, I think it's a more simplified version. It's a better version. And obviously we're optimistic because it covers over 80%. And I think in terms of value, over 90% of the Philippine products going to the UK. So as we've noted, we see that as a further boost, and we continue to work with the Department of International Trade to develop those strong points and benefits of DCTS.
If we are so important, why don't we have a bilateral trade deal yet? Just like Vietnam with the UK.
Well, I mean, what I mentioned, of course, is on pork. In terms of bilaterals, I think that the UK works across various markets, but I think DCTS will be of great aid to us. And although I know you've mentioned and asked me on a number of occasions about the FTA, and I noted that. So, look, I think that the UK values highly the Philippines. As you know, last year was the 75th year of diplomatic relations. We have very strong ties. President Marcos has very good relations. We know connections with the UK. Went to Oxford. My understanding is children went to the British School of Manila. So there are very strong ties. And we see a lot of interest as we've developed, and of course as our embassy and as our ambassador is doing, to further develop. And obviously just announced, I think recently as well, further investments from the UK, looking at investments from the British Investment Fund into green energy and other areas of that type. So yes, a key focus.
All right. On that note, Chris, always a pleasure to speak with you. We look forward to speaking with you next month in the same time zone. Philippines already. Back in Manila.
No, October I'll still be here.
Oh, okay. November then.
Actually.
Okay.
But I'm looking forward to it.
All right.
And I wish your viewers and everybody else a very good day. Always a pleasure to speak to you, Mimi, and the others.
All right.
Take
See you
care.
soon. Okay, now before we go, for those who tried to guess a blind item, this is the stock pick of Chris Gabaldon. Bloomberry, she's seeing a 20% plus upside. And that's it for the show. I'm Michelle Long. Thank you so much for watching. Stay safe and stay with ANC.
To come out, that's going to prove to be better for demand. If we do